Hi, this is Elio Life Sage. I want to do a quick market update. Like always, none of this is financial advice. Always do what's best for you. So the Dow Jones, it looks like it's pushing up in this four wave. I think this is the most probable way, count here, and then it should pull back in five, and we should get actually another four, another, really strong rally back up, and then that should fail. And then even after all that plays out, we should get another rally, even more significant. So I think October is going to be a tough month to trade, but I would be looking for big swings, but not potentially holding for a trending position. If this is the count across the market, then holding with leverage won't be a good idea unless you trade this swing, and we'll see what the pattern morphs into. And then unfortunately, when this is finished, then we should get that lights out drop, and perhaps the 1987 moment that everyone wants or expects, or maybe they don't expect, but this has to play out now if this is the count. But there's always another alternative, right? That's the thing. There's always alternatives, and of course, uh, let's take a look here. Uh, we are below this peak, so that's good. Before I show this alternative view here, and we are. So this alternative view is still valid, but what that would imply is next week we'll have a market crash. I mean, that's what this is saying. Next week, the stock market's going to crash 1987 style, like a historic crash. That's what we're saying here with this count here. Okay, and it's valid. This is still valid. I know it's not probable, but it's a valid count. Now, if the two plays out longer, it's invalidated because then it's too strong. So you just, like I said, I just can't predict the future. But if you're all in long, it's a massive risk next week to set up. There's a lot of conditions in the market that could set up for a historic crash next week, if this is the count that I have shown here. And this too should not push up much higher, or it would invalidate it. If it gets invalidated, then you're looking more like a 4. But then if it continues to extend, then that even becomes invalidated, and then you have to look at something a lot different. And I'll show that later as the counts morph. But for now, we'll show this count here, and you do what's best for you. But this is kind of what I think we should see. The surprise will be a historic market crash next week. Then the SPY is kind of the same situation here. You did finish 5 waves, and you could call that 1, and now we're in 2. The other alternative to line it up with the Dow is you make that a 3 and a 4, and you make one more push in 5 to finish this whole move, and then you finish this one, and you get this massive sideways action again I was telling you about before you get a massive meltdown. So we don't know, but I think the preponderance of the evidence to which path the market will take, we'll know early next week, because if it's this 2, there's not much time or intensity left the market can handle on the upside before that is negated. So before this is negated, so Monday, Tuesday, huge days in the market to start this push down, and then essentially a free-for-all towards the end of the week. And I believe CPI is midweek, or is it Thursday? I have to look it up, but maybe CPI comes in so hot the market has a massive meltdown. And if we do remember with CPI, it was CPI that caused this meltdown right here. And I do remember trading NAP as we were down 1,000 points in one day, which we haven't had since. So CPI, unexpected surprises in CPI on the negative side. which would be a much hotter than expected report, could always crash the market. So I don't know, but I think the market is has this possibility next week. If that doesn't happen, then you're looking at a lot of chop, man, and you're gonna have it's gonna be you have to be really good getting in and out of the market to trade that chop that's coming probably all the way through to early November before the market could trend again into Thanksgiving and then end this thing by around Thanksgiving, which I think is when the government shutdown deadline is, around that time frame. So the market could be under pressure still all the way to that, but it could trade sideways into early November, or we have a historic crash next week. I think those are the possibilities. Historic crash next week, or a sideways market into the shutdown deadline, and then post shutdown toward the end of November, then the market should be, in a better position to rally for a more extended time period. So anyway, that's it. That's the SPY. That's the Dow Jones, and then the Qs. Again, I call this a 1, 2, 3, 4, 5 for a 1, 2, 1, 2. Obviously, massive overlap in waves. And then this wave is so short, you wouldn't want to label it as a 1, 2, 3, 4. It's too short for a 3 compared to the 1. I don't like that look. So I call it a 1, 2, 1, 2. And you can see how this subdivides. It's not symmetrical, but it still has the divergence you need for an impulse. So now on my last video, I gave this area as a next really good opportunity to sell, and we tagged that today. And not only that, it's the bear flag top, and it's also close to the channel line going back to the October lows for the Nasdaq. So a lot of resistance here. It's still possible to push up into 367 or even 368, but it's not favorable. If this is the count, and next week we crash, we should start seeing the pullback immediately Monday, and it shouldn't really stop from there. This was probably the last chance to get out of the market today. If we do see some chop and we go higher, then we're starting to maybe negate. We're negating the crash, and then this pattern could morph into something different because it is 3 legs. So if it's not a 1, 2, 1, 2, then you have to think of it as an A, B, C, which is a corrective structure, and then you could say that this is an A, B, and it will run and do a flat, come up, and just break this high, maybe even get up to 385, and then have a massive dump, and this would destroy everybody, bears and bulls, because this flat would be not expected, an A, B, C, but we don't make a new high. Okay, we don't make a new high, but we get close again, and then wave 3 comes. So if that were to happen, two needs to extend. So probably the stop out area is probably somewhere around 369, 370, or a gap and run. If you get a gap and run, then this is a 3 of 3, which is what you would expect if this is going to do a flat. So Monday is really important, and it will negate, I think, a lot of Elliott wave scenarios on Monday, maybe Tuesday, and then I think it may be a little bit easier to see where we're heading with the market. And then the IWM, there's too many possibilities. It could be a 1, 2, 1, 2. This could be also the start of wave 4. And then we hit 5 at 163 and come back to 175. Too many options. I'm not even, you don't even really want to label this as a 1, 2, because really, if I look at this close enough, this could be your 1, 2 right here. And then, it's just too many possibilities in the Russell. Bitcoin in an interesting moment. If this is going to be valid, this corrective move, we need the 3 down. We need to get down to 25,000, 25.5, 25.7, and now it should happen because you have three waves off this low to finish two. So if Bitcoin's going to break down, it's the moment of truth, I think. Here in an A, B, C, this is the stop 28.2. If it can push through that and even break 28.6, then you're looking at an impulse off the bottom here. And to me, that would negate the bearish structure. And that would also be a clue to the market that maybe the NASDAQ is going to do this flat that I had here, this extreme flat. Bitcoin may show its hand. If Bitcoin is weak this weekend and we do sell off, then I think that's telling you where things are heading. It'll be interesting to see what happens up here. If we can push up and get up into the 29,000 area here. So we'll see what happens. Oil totally got rejected, and we've been really nailing oil this trade this whole since March, guys. I mean, we have had this swing for swing exact, and then here I said, you had to be careful looking for that final swing because it's always easy to be off labeling waves, and it looks like to me that X is set, man. And now that that's set, that is going to be a deflationary risk-off moment here, which it feels good now, but then it's going to get scary just like it got here. So this is also a warning sign perhaps the market is going to have this massive meltdown at any moment. But like all things, it's probably due a retrace soon. It looks like it's already in wave 2 right now, in some kind of shallow wave 2 here. And it's in wave 2, so it should still go back up a little bit before our next leg lower. If we do make a new high, then oil is in a interesting spot because as you can see, we corrected the whole cycle from the low, even from the daily. So what that tells me is if oil can take this peak out, the X is going to extend. And it's going to go much higher. We're looking at 128, 130 probably here on it, and that would really mess with the market, man. If that happened, yeah, we're looking at like 120. I would say 130. X would extend, so that would be a signal to not give up on the energy complex just yet, but it's a big break, and we are in a daily cycle lower now, so it's a bear mode. Bears are in control of the oil market again. Good rejection, so I think that X is in. Gold needs one more push lower, so it's in this four wave. It could be a flat and almost be ready to go down. If not, it could still pull back and go take another high. So, but gold should go lower, and silver should go lower if these are right. Bond market really surprised to the upside today in an extreme fashion. Here you were able to keep divergence on this leg, so this is clearly some kind of fifth wave here because we took the peak out. But could it extend? Sure, we did. It's having trouble. This is massive resistance, guys. This is massive resistance. But if it can flip it, that's huge. I mean, but it still's got to get through 5.1 to get to 7, to get to massive crash. So keep an eye on that. But it's below. It's having trouble here, right? This line was here before the price action, so these lines work, guys. I mean, obviously it's struggling, but today it tried, and I believe it's gonna be successful in taking this out, and then it should be pretty quick advance to 5.1. And then the 30-year, I don't have it on here, but again, a fifth wave here, and I would Again, we do have divergence. It's good here. So this fifth wave is coming to an end soon for this third, and then we should get a pullback, but then another high, and then a pullback and another high because the divergence was erased. And if you can see here, this daily peak took out all the divergence, so you really can't even label that a 3 and a 4 anymore. You know, now you have another one too. This is why going long bonds is so dangerous, and you need stop loss because this is your 3 of 3 that probably just finished, and now but it should continue to extend. So as you can see, this is why Elliott waves and just using it is tough because you can get it wrong sometimes. But this has a lot of ramifications across the market now that we're going to get melt up. I've always charted the mortgage rates. I haven't shown this chart in a while. We had this pullback in 2 and a 1, 2, and now we're heading up in 3. The target is 10.5% using my system. And so far, this system has been pretty good predicting everything. So I'm not sure why it wouldn't be right. Here's your channel line. So it says we should hit that around the end of next year. And we have to pray that it does 3 and not 5, because then it will pull back and go even higher later. The dollar index is pulling back. Here, I believe it has one more push higher that will surprise some people. And then it could really be, I think, a moment of truth moment. Is it going to go to new lows or do a 4 and a 5? It'll be really interesting. But I do believe here, I'm going to label it like this now. 1, 2, 3, 4, 5 for that C. And now we're in this X. It actually looks like it should still go a little lower. VIX closed below our magic line I have drawn here, and it just couldn't break out. So now where can the VIX turn? And again, I've done this multiple times, and so far it's been pretty accurate here. And look, right at we're getting bids right where I would have expected it to, right here in this area. So this is the danger area if you're long the market here, because we should bounce in the VIX and then we'll be back up in the danger zone. If it could bounce and fail, that could bring the VIX all the way back down. So what you want to see is, if you're a bull, a bounce and a failure and break that pivot. That's what you want to see. If you see it bounce and then just crash upward to 26, then we know we're in trouble. The market's in a lot of trouble. And again, you look at this candle, it just wicked right into this area, boom, got bid up. So it was perfect. It'll be interesting to see early next week how we trade. All right, so that's how the market looks right now to me. Technology, you know, these waves are just kind of pushing up higher. So this is interesting count for Apple. So Apple, let's go to the daily and see how that cycle's doing. And as you can see, we're still in the daily bear market of Apple here. There's your peak. So it's still in, the bears are still in control despite all this bullishness. But the swing count doesn't look quite right to me. You know, it just looks off here. But you do have some divergence here in this leg between this peak and that peak. But it clearly looks like 3 waves, corrective, 3 waves, right? I mean, that's what I'm seeing, right? So now here looks like 5, right? So it's a very confusing Elliott wave structure for people. So you expect 5 down. But since this was such a strong thrust upward, it really wouldn't be a 1-2, 1-2. So you either have to force the label in, which is never good, right? You could maybe force it, you know, do something weird like that. But What this also says is if that's 3 and that's 3, then could Apple be doing a flat? And it's possible that it does that and comes back up to this area, but respects this high. And this is the Nasdaq melt up scenario that I was trying to show you guys. So I want to keep an open mind to that possibility, but we would need to see some price action on Monday. Really be bullish to break that up. The other option is I just have to force the structure, or perhaps TradingView has incomplete data. You know, perhaps this is actually a higher peak. We just don't have all the data, and then I can label it something like this, right? So you have to go with whatever is best for you, and if that's the case, well then to me it's a 1-2 1-2. And so if it's a 1-2 1-2, where should Apple fail? Right? Where should it fail? It should fail right where it got hit. And look, 177.78, and look at those candles. Total, we got rejected right there. So it seems like the market is trying to behave as if this is the count right now with that bar. We'll see again on Monday. Do we get that wave 3 follow through to the downside? That's just one stock I was just looking at. Google's another one that's really trying to defy gravity. And again, where would that fail? Right in this area, but it needs to be below 139. If it makes a new high, then we'll need to take another look at this count for Google. But there's that. Of course, Tesla, right? Everyone loves Tesla, but the stock has got some more bearishness to come here, and just like that. And look, it tagged 262.56. It's basically there. So this is in a massive sell area right there, and it got rejected, and now it's trying to figure out what to do. If it could actually push above this pivot at 263, then it may take out the 279 high here. Yeah. So the bulls really need to take this peak out, and then it's going to retest this high. Again, that's why Monday is so critical, right? If you can get that follow through, see, you'll test it. Now, even if you go back and test it, you could still fail. It'd still be a 2. So just keep that in mind. But this is important for the market. Nvidia. So Nvidia broke this high. So this is interesting sequence. Here, a connector. So what this tells me is Nvidia should go higher before it goes lower. So Nvidia should see 473. It's just people probably are just too short on, too much on one side of the boat, but that's what happens, right? So that's probably got more upside. So that should support the market still. If this is the count. And then this could be a 1-2 1-2. I don't have it labeled that way. But I'm just going to label it like this for now. Of course, Microsoft. Now this too is really extended here, if that's the connector here. So this is probably past. Oh no, it's right where you want. It's still in a short area. So this is in a short area too here. Okay, so that's Microsoft. And again, lower low. To me, 5 waves down, impulsive. Corrective. So do what's best for you. Adobe's got earnings coming up. So let's take a look at Adobe. Again, 45-minute shows divergence. So this is some kind of impulse down, and one cycle. So it's a weird looking wave, but something like that. And now it's up in 2. So it should struggle in this area. And it is right where I would expect it to. So perhaps it's going to have an earnings meltdown coming as this head and shoulders pattern plays out, right? That's what you're guessing. If you're a bear, that's what you're hoping for. Head and shoulders plays out and you get a massive meltdown. And you do have some gaps for those that care about gaps, I guess. So let's see if it's a daily gap. Daily gap's more important. Yep, see, so you still have a daily gap there. So this could just be another 1-2. Ready? Waited for its 3-3 moment. AMD in this X-wave connector, we've had that here. And if semis need to go higher, this probably needs to go higher too. Yeah, see, this got to go to like 109, 111, somewhere around there. Looks like so semis may have more upside, but it doesn't have to, but it looks like that to me. Let's look at some of the triple ETFs like the SOXS and SOXL. So SOXL, not in an area, and now you're forming a connector for this move. We never got to this area that I wanted, and you haven't broke the full cycle yet, but you're about to. But it's really close. So this is just a connector for this this C leg down. So you're still in C, but this could go lower. So this could be in C1, 2, if it reverses. Even if it get a little more upside, it'll do something like that. And SPXL now was interesting. It hit a 3-wave area and bounced right in 1, 2, 3, 4, 5. So this is, so this again, this is a corrective move, 3 swings up. So we have 3 down here. So we haven't confirmed that this is a connector. So again, like SOXL, it could still be C, but just 1, 2, like this. And then you get something deeper. And then that becomes your 3-wave move, your ABC. So that's how I would lean toward now, something like that. SQQ was interesting today. It hit the buy area exactly here, this 3-wave area, and immediately bounced and filled a gap. And this is definitely no 3-4 here. This is correcting the whole move. So this is a 1-2 massive overlap. So it's a 1-2, 1-2, or you could even say it's 3 and 3 for W, X, and then Y. Later, you have a higher high here. So this really should play out to the upside. The odds are more upside in SQQQ as this pattern eventually plays out. It looks almost just like the VIX in some ways, and we can get up to these this area up here, 24, 25. Now the S-Dow really had been working out well. This inverse head and shoulders played out, and then we got this rejection. This could be 4, and we can get 5, and then we still need the 4 and 5 like I showed you. The other option is another 1-2. Okay, and we can be making a bigger inverse head and shoulders, a left shoulder, a massive head, and we make this right shoulder and then come out up to 31. And then we do it again for a left shoulder, a head, and then another right shoulder, and then you get the idea. So this is a lot of possibilities, but this could be another 1-2, or it could be some sideways action to create the right shoulder. So we'll see how it goes. And remember, I drew this line, and we were actually close to tagging it here, and we still may tag that. And if we tag it, that would be a really good opportunity to, maybe take some off the table if this line's tagged later. And then TQQ just in this X-wave connector. for this first swing. I want to see it go lower, down into this area. Um, so that's all I'm going to go through today. Everything else is, I'll do some live streams tomorrow. So anyway, this is the market, guys, and I would say it's a pretty binary thing. I think either next week we're going to have a historic market crash that they'll talk about, forever, or it will push higher and negate that option completely this year, and then we just get a sideways, choppy market that still trends lower, but in a very difficult, not a straight line down. In these threes, fours, and fives, and a push back up, and then another push down, and this thing plays out for months and months. And so I think it's just like, but I think the setup for this massive crash really is set up for that next week. I just don't think it can go another week of sideways action without breaking the RSI channels that I have shown to negate the setup using my system. But I mean, there's some people talking, well, the week of October 18th, you'll see it crash that week. I think if the market is supported through that, I don't know. I think the market may surprise people to the upside then. I just think this market, it's ready to do it. The count and the conditions are set up to do it right now, next week. And if it doesn't happen, and we get this sideways chop in the fours and fives and fours and fives, I think you're not going to get the market crash scenario, guys. I think scenarios invalidated, but I do think the bear market will continue, the sell-off will continue, but I don't think you're going to get this grand super cycle meltdown. It is just my opinion based on what I'm seeing in the charts right now. So if we're going to get that, next week's the week. The Bears have to bring their game. Maybe it's CPI is horrible. Maybe it's something else. Maybe the first tech report out of Adobe is so bad, like Apple was back in 2000, and everybody just sells tech off on that news. Who knows? But whatever is going to happen, it's got to happen next week, I feel. And it's just my opinion based on what I'm looking at. All right, guys, that's all I got. Talk to you later.